41.32 at the close, just down about 26 points, but it gets itself back to where it was at the beginning of the month. And think of all the volatility, think of the debate over inflation, think of all the headlines from Fed officials talking about 25 or 50 basis point rate hikes that move markets. Well, this is where we got nowhere, back to square one. Michael Wilson, the big bear over at Morgan Stanley, still thinks this is a relief rally. It'll take the S&P 500 back up to about 4,300 by mid-August. Then the market will go back down and test 3,400. Let's move on to treasuries, because I want to tell another big part of the story, and that was the latest news on inflation. But the same kind of thing, actually, I just want to stop and say S&P futures, after this decline, showing a little bit of optimism as Asian trade is getting underway. But on the 10-year, same thing, started about, or ending the month basically where it started. Today, the big story that got bonds actually falling in yield, rising in yield, falling in price, was the EU inflation number. It was a record, 8.1% year over year in May. German Bund sold off, other European Bund sold off. That fed into the U.S. sell-off. Then consumer confidence from the conference board showed inflation expectations for the next year in the U.S. at 7.4% year over year. Finally, with oil, in fact, we're looking at this lovely chart for the Eurozone inflation, 8.1%. And how does oil fit into inflation, of course, in the fact that it's moving higher? Today, the big story, of course, is the EU agreeing on their 6 rounds of sanctions that will ban imports of oil from Russia that are delivered by sea. That's about 2/3 of the EU imports from Russia. So we did see West Texas Intermediate going almost $120 a barrel, falling back to $5 a barrel on the Wall Street Journal story that we just mentioned, suggesting that maybe OPEC will cut Russia out of coming deals. Now it's time to go to Annabelle Duros for a look at the markets.
Thanks, Kathleen. Well, one sector that did buck the trend that we saw on Wall Street over the past month, that is Chinese stocks listed in the US. So we actually saw the Golden Dragon Index cap its first monthly gain in about 6 months. We saw the likes of Alibaba, JD.com, Baidu all rising throughout the month as well. Now, the reasons for that, well, it's pretty clear. We saw COVID cases in Shanghai and Beijing coming under that 100 level. And also we're just seeing COVID restrictions start to ease in the mainland as well. But flipping the board now for a check on how we're opening or setting up for the open in the Asian trading day, first day of June. So Australia futures, they are pointing to a weaker start here today. They last closed a couple of hours ago. Meanwhile, dollar strength does continue to be a theme, and we are seeing that play out, particularly in the yen this morning, that it's at weakest in about 2 weeks. And then finally, Kiwi stocks also coming online to the downside. Heidi.
Annabelle, as you say, really these global inflation fears continuing to preoccupy the minds of the investors. And Kathleen, the EU inflation, we knew that it was going to be high given what we've seen from the likes of Germany, for example, and given that we already heard the ECB president flagging that we're likely to see those quarter-point increases at meetings in July and September. But an all-time high for Eurozone inflation, really intensifying that ECB debate about how quickly they need to now move rates of record lows, right? Jumping 8.1% for the consumer price index from a year earlier in May. That far outpaced the 7.8 median estimate that we had in the Bloomberg survey. So, of course, we know a lot of this factors like food and energy inflation coming out of the Russian invasion of Ukraine, but it does call into question, what does the ECB do? They've been kind of behind the curve compared to what the US and what the BOE have been doing.
Well, of course, some people say the ECB hawks who have been, crowing or whatever the hawks do louder and louder for 50 basis points may have their case strengthened, right? So we'll see next week. That's going to be a very exciting meeting. And a meeting today, Jerome Powell, Fed chair, called to the White House to meet with Joe Biden. It's their 3rd in-person meeting. Now, and people are casting this as Biden trying to shift the blame for inflation to the Fed. I think that's a little harsh. I think what he's trying to do is gently remind the world, particularly U.S. voters who are going to have to vote on Republicans versus Democrats in the midterm elections, that inflation is ultimately the Fed's responsibility to bring down. President Biden and his team can try different things, put curbs on oil and gas prices, which a lot of people criticize, but ultimately it's up to the Fed. And I think that's what he's trying to say. And he was very, very polite as he did so. So as we look at President Biden talking about these things, he mainly said to Heidi, he's going to respect the Fed's independence while tackling inflation. Let's listen to what he said.
My plan is to address inflation.
Fed's responsibility to bring down President Biden and his team can try different things, put curbs on oil and gas prices, which a lot of people have criticized, but ultimately it's up to the Fed. And I think that's what he's trying to say. And he was very polite as he did so. So as we look at President Biden talking about these things, he mainly said to Heidi, he's going to respect the Fed's independence while tackling inflation. Let's listen to what he said.
My plan is to address inflation. It starts with a simple proposition. Respect the Fed. Respect the Fed's independence. They have a laser focus on addressing inflation, just like I am. And with a larger complement of board members now confirmed, I know we'll use those tools in monetary policy to address the rising prices for the American people.
Well, so for some analysis, let's bring in our White House reporter now, Courtney Rosen. So, Courtney, a lot of people are bringing politics into this. They're likening to President Reagan calling Paul Volcker to the White House in the mid-'80s when he faced re-election, and inflation, likewise, was a very big problem. You're there. What are your big takeaways from this meeting?
For me, my biggest takeaway, and he brought reporters in the room today when he had Chair Powell there and also Secretary of the Treasury Janet Yellen. My biggest takeaway is the president wants to highlight to voters that he is doing something about inflation, but really this is up to the Fed chair, as you were talking about, and also up to Congress. And he's used this as a way to kind of re-up his proposals for Congress that have stalled in the last year. His
after they lost their seats in the election unexpectedly. That's Terry Butler and Christina Keneally.
Well, Ben, so this is also a conservative government being replaced by a more liberal government.